All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, April 28, 2022. If you like the content, like, comment, subscribe to the channel, etc. Come find me at carnivoretrades.com for swing trading alerts and analysis. Anyways, mega squeeze here on our hands. And this alert was given out to members yesterday and on Tuesday. We went long the market, had a couple buy signals come through the wire, a couple proprietary indicators. Give me some buy signals, and we were able to take advantage of that today. Nicely on the money on our long positions here as the market squeezed up. S&P up 2.5%, triple Q's up 3.5, was up almost 4% at one point, but coming off the highs into the close here. Now, obviously, the big story of the day, Apple and Amazon. So Amazon barfing on earnings, completely puking out, is stabilizing a little bit here at about 2,600. Apple, on the other hand, is bidding up to 168. So Apple saving the day. The spiders got all the way down to about 425 after hours, and now they're bouncing back up to 427 as as Apple does save the day. Apple now pushing up to almost 169 here after hours. Let's take a look here on the 10-minute. You can see nice little spike there for Apple, and kind of a predictable action, right? Amazon drops the ball, then Apple is always the hero, and Apple comes into the rescue. By the way, look at this little setup here on Apple. So last month we had this big sell bar, then an inverted hammer gap down below the 200, ended up being a bear trap, and that was the start of this squeeze going into the end of March, and basically kind of got the same setup here today, or over the last couple of days. So big sell bar, gap down, inverted hammer below the 200, and then a gap up and a mega squeeze today on heavy volume for Apple, and it is so far holding the gains after hours. We'll see where it settles here. A report just came out about 2 minutes ago. Apple does report late. That's why I'm doing the video a little bit late. So around 166. So into this top range here. Now, I'm going to be watching. I'm going to show you on the E-mini here. This is really the area we're going to watch. Now, if we really start to squeeze up in the last 30 minutes, you'll be watching this area 4303.50 on the E-mini. If you can close above that, that would be a huge positive, and it would basically slam the door shut on any sort of comeback attempt for the Bears. I don't know if it necessarily happens right now, as we're basically just hovering off the highs here. Again, spiders settling around 426.75, 427, as Apple is coming a little bit off the highs. But overall, the day is saved, and we got a mega squeeze on our hands here. Let's take a look at a few sectors. So one of the first things that gave it away to me, semiconductors up 5.7% today. Intel taking it down a little bit after hours, though. That is down at about $45. But semiconductors, here you can see on the intraday, nice bid up, and I tweeted this out. It was up 3% in the morning, and I said if this can hold the gains and stabilize, that will bode well for the market, and that kind of predicted this squeeze here. As look at the market, just 1 2 3 4 5 6 7 up, candles up here, a little consolidation, then a pop before we had some hedging going into the big tech earnings. But nice little move there on the semis, and we're watching this falling wedge pattern. If we can push up tomorrow, 20 moving averages there, but it is minor. You do have this red bar, but nice little falling wedge pattern there on the semis. Cloud software also getting a bit off a double bottom, so these weekly levels are being defended. That is a good sign for the market. IWM, look at this candle here. Huge tail after a gap up, tested the lows, and then getting a bit up here. So the level you're going to want to watch on the IWM is this white line here. So that is the green bar low. Going back to the 14th of March, that's a reversal bar. If you can close above that by tomorrow's close, that would be, that would essentially save, quote unquote, the Russell on a weekly time frame. It's not that far away, wouldn't take much here. Just need one more little update there. So that is a key line in the sand there to watch on the IWM. Triple Qs, needless to say, off the lows here, did close above this red bar high. So that did negate that. Again, where everything stabilizes after Apple and Amazon, and depending on where we open tomorrow. By the way, we had negative GDP growth today, and that apparently is the catalyst for the squeeze. So a lot of the times, like I say all the time, the fundamentals matter, the economics matter, but what matters more in the near term is positioning and hedging. And we have a lot of hedging going on ahead of a major, news event, earnings announcement. Those hedges will eventually come off, assuming that the sky doesn't fall. I think I joked yesterday, as long as Apple doesn't take a 50% haircut like Netflix, these hedges are going to have to come off, and the market will likely rally. Well, we started the rally a little bit early here. Nice move there on Netflix as well. But we started the rally a little bit early today. And we'll see if we can get follow through tomorrow. Anyways, here, let's look at, so we talked about IGV, SMH. Let's talk about the transports. Transports bidding nicely, up 2.6%. Big winner on the day was Canadian Pacific. They reported huge move there for CP, just under 4% gains for the day, which is a big move for this rail stock. Jets, also, we've been covering lately, potentially a higher low here. So I've been talking about this. If this can make a higher low, this can, potentially move up to 24, 25. And this has been a strong sector. So again, if the market does find its footing here, the Jets are in good position for another rally. Rates here. So again, pulling back here and getting a little pop basically off that 20 moving average. Again, story hasn't changed. I still think the 10-year does need to test that 3% level, or if not, at least pierce it before it can really roll over. And the 30-year obviously already has pierced 3%, but logically you'd expect it to get up there as well if the 10-year does. HYG, so high yield debt, again, we're watching this little falling wedge potentially. Again, I don't like what it did on a weekly close last week, but again, things don't, sometimes things take time to roll over, and nothing to say that this can't rally here, especially if we get some type of a squeeze. HYG obviously at the end of the chart here, not a good look overall, but it does have a potential little kind of falling wedge building here on the daily, so we'll continue to monitor that. Home builders getting a bid, just like everything else, up 2.7% there on the XHB. ITB up 3.6, still in a weak technical position, but I still think that these are a little oversold short term and probably can get a little bit of a rally, especially if the market does hold up here. VNQ coming back in, testing that 50 moving average and getting a nice bid off of that. So we'll continue to watch this one, but a nice little bid there. And it really had to, because if it lost that 50 moving average, you'd basically have a failed breakout on your hands, which can be ugly and can get ugly very quickly. Fins, a bit of a muted rally today. XLF only up 1.28%. Broker dealers did get defended here at the lows, up 1.5%. So, a decent day, but it was really a tech-led rally, and that's nothing, nothing wrong when you see that. I'm going to adjust this little trend line here, so we'll just put it right there. And again, also potentially a falling wedge here, a bigger one, but on the XHB. So we're seeing kind of this recurring theme, right? Lots of falling wedge patterns here. And the XBD typically trades in lockstep with the HYG. So we'll be continuing to monitor that as well. But XBD and XLF up modestly. Again, more of a tech-led rally today, all things considered. Crude did have a nice move. We had bullish inventory numbers this morning at 10:30. So that got back above 105. It's 105.33 currently. So we'll just be watching this pivot high. If it can take that out, you'd potentially have, well, you would have a higher high, but this is the more important one here. So if that one doesn't get taken out, you still have lower highs on the daily, and nothing too new to report here on crude. We do have XLE, so XLE did get a nice bid today, up 3%. Exxon and Chevron both report tomorrow morning before the bell, so obviously that will be market moving, and that will move the XLE. I have no idea what they're going to do on earnings. But they did take a little bit of a fall here, maybe some hedging going into that report, and then kind of squeezed up with everything else today as the whole market really just squeezed. XOP, same kind of deal. And the OIH, although that finished below the 50 moving average. Nat gas came back in a little bit, got rejected at 750 area. So again, right, I told you guys going right to 750. That's where it went. Nice little pullback there. Again, it's going to have to do some back-end filling. I don't really have a read or a particular setup here on nat gas at the moment. Dollar index getting through triple top, really double top, but we'll zoom in on the monthly. So it got through double top really the other day, and now getting into the other double top. You could basically make a case it's a triple top at this point, but it did get through that. It pierced through it by a penny or two. Dollar is really extended. It's overbought. It needs to pull back, but you got to respect it at the moment, and it is a strong currency. There's a lot of money flowing into it right now, a lot of foreign money flowing into the U.S., and that's really one of the main positives fundamentally for the U.S. equity markets. But dollar getting up into that level at 104, and would not be surprised if it stalled out here a little bit. All right, gold pulling back to that 100 moving average. What was the low, guys? 1881. So I said 1875. We got pretty close there. 1870 spot 9 was the low. So that was, basically my level that had to get tested. It is getting a bid off of that. I was looking at GDX today. I was really hoping it would get down to this 100 moving average. I was looking to maybe pick up some call options on it, but nice little bid there on GDX. It is coming off the lows. I think this has better support down at about 32, but it does have a short-term local support in this area, and it is very short-term oversold. So maybe it can come up here and fill that gap around 37. But overall, gold is bouncing, as is silver a little bit. Still finishing red, but it is very oversold, and it does look like this is a pretty decent level of support here. I told you guys yesterday I like 23. It got there today. SILJ didn't quite get down to 1175. So it does appear to be a little bit stronger than spot silver, but it is bouncing off that 12 handle as it closed at 1272 today. Platinum and palladium and copper, really for that matter, did not participate in this bounce. So we'll have to watch this for pattern. If it starts going sideways, that could be setting up a bearish pattern on copper, and that would not be bad for the market. So bear that in mind. If base metal prices start to drop all of a sudden, it's telling you that, obviously it's a good economic indicator. Or, another way of looking at it is that, my thesis about yields topping means that we're contracting now. We did have that GDP data today. So a lot of different dynamic shifts going on here right now. And we'll just have to take it day by day and see how it all shakes out. Anyways, let's flip over to Bitcoin here. All right. Okay, so Bitcoin. So yesterday I told you this level here, 48.25. So this red bar high is the level to watch. If we look on an hourly, you can get a little bit better of a sense. So it is, pushing up, needs to consolidate, do some backing and filling perhaps. But if it gets through that and you close above that on a daily basis, this thing can rally in the near term. And basically negate this kind of bearish drop. But as long as it stays inside of this red bar, it still has precedence to move lower. Same thing with Ether. So the level there, same as yesterday, obviously, spot 36. So in that area, if you can close above that on a daily basis, that would be bullish for Ether. And again, you do have this trend line, so it does look like that is getting defended a little bit. We'll see if there's any follow through tomorrow. Obviously, if there's follow through in the equity markets, generally there's a positive correlation, especially now, lately, there's been a positive correlation with crypto and equities. Anyways, let's flip back over here to the spiders. And so it looks like we're settling around 426.75. So basically right at the low, just above the low of this tail candle here. So overall, a nice rally day for the market. Amazon is settling out at 26.12. And Apple is settling at 166.59. So basically, still a nice move for Apple, and they did get to save the day here. Again, we'll be watching this area tomorrow, this red bar high. If you can close above that, that would kind of slam the door shut on any sort of attempt at a bear attack here. And I think that would give you the upside bias to about 43.80 on the daily time frame. Anyways, guys, I'm wrapped up here. Come find me on carnivoretrades.com. You guys take care. Have a great night, and I'll talk to you all tomorrow.